Hello everyone, welcome back to my channel Stock with Khan, and in today's video I'm gonna be covering NIO again. I'm highly bullish on this stock and so are the people in this article as well from Seeking Alpha. So stay tuned because I think you're gonna like today's video as well. Welcome back. So today I'm gonna be covering NIO and I'm gonna go through one article from 2 days ago that was written and released on Seeking Alpha. And so let's get actually right into the article. The article title is NIO, the growth is just about to begin. And you can see this is from September 16. So the summary is obviously NIO's real growth is just about to begin as the scaling of its business is getting started. The expansion to foreign markets along with the release of new models should lead to the creation of additional shareholders value in the longer run, and we continue to hold a long position in NIO and have no plans to unwind it at this stage. Looking for a helping hand in the market? Oh well, this is not so important. So let's get into the detail of this article. I'm gonna highlight for you guys. So NIO has all the chances to become one of the most popular electric vehicle brands in the world. The company has already established a solid presence in its home market in China, and currently it's in the midst of expanding into the European electric vehicle market, which is still in its infancy. On top of that, the growing network of service centers and charging stations along with the release of new vehicles next year should help the company to increase its brand recognition and drive more sales in the following quarters. Considering this, we believe that despite the outstanding top-line performance in recent months, NIO's real growth is just about to begin as the scaling of its business is just getting started. This is a really good news. And I really like this article because they have mentioned all the truth that is out there and all the catalysts that right now could really potentially drive this stock to very new highs from now on, to be honest. So expansion is about to begin. Founded in 2014, NIO has established a strong presence in the ever-growing Chinese EV industry, and it currently is one of the most dominant electric vehicle brands in the region. Its flagship vehicles are premium SUVs that sell under the name ES6 and ES8. ES8 is actually quite prominent, will also be used in robo-taxis next year in Germany. And its stock has greatly outperformed the market in the last 12 months. Further, it's been said that the biggest advantage of NIO is that the company has built a solid infrastructure from scratch in China in recent years. Its clubs, which act as dealerships in China, are now in 128 Tier 1 and Tier 2 cities, and the network continues to expand with every quarter. Also, the company has nearly 200 service centers across 133 cities and more than 230 power charging stations across China. That is really good. So obviously easily leading China in electric vehicles market. On top of that, NIO also outsources vehicle production. I have to consider Tesla. So of course, NIO being a Chinese company, it's leading the electric vehicle market, but obviously Tesla is dominating 40% of the market. So NIO is the second leading company overall, but the top Chinese electric vehicle company. On top of that, NIO also outsources vehicle productions to a reliable third party. As a result, the company doesn't need to spend many resources on building facilities and expanding capacity, and at the same time it can focus solely on increasing its brand recognition and growing sales. Just recently, NIO reached a deal with its third party manufacturer Jianghuai Automobile Group, which develops all of the company's vehicle to increase an annual capacity to 240,000 cars and to continue to manufacture the company's car at least until the end of 2024. Considering this, it's safe to assume that NIO will be able to fulfill the growing demand for its vehicles. That's really good. The good thing about NIO is it's always looking for cooperation. Recently with Intel, for instance, some other cooperation will also come, and that really could drive this company potentially in the near as well as on the longer future to its real highs. In addition, NIO's unique battery as a service concept so far has been successful, and as a result, the number of battery swapping stations continues to increase with every quarter as well. There are already 361 swap stations available in more than 100 Chinese cities. By end of the year, NIO plans to have 700 stations and over 4,000 stations globally by the end of fiscal year 25. The biggest advantage of this concept is that it deals with the problem of the long charging time of electric vehicles, as it takes around 3 minutes to replace a battery inside the vehicle. This is really good. This is also a real alternative to expensive solid-state batteries, which in theory could last longer but are still in development and won't be available at scale anytime soon. Going forward, NIO also has the opportunity to create additional shareholder value by updating this lineup of vehicles. Currently, the company plans to release 3 new models in 2022 and possibly more beyond 2023. Its upcoming car is a smart electric sedan. I mentioned that yesterday in this video as well, ET7. The middle class ET7, the prototype of the vehicle was finished in May. It's currently in the validation stage, and the full version of the vehicle is expected to be launched on time next year despite the chip shortage crisis. The goal of new launches is to enter the mass market and provide diversified products for different groups of customers to establish an even greater presence in the overall EV market in China and abroad. On top of that, the entrance of the mass market will likely lead to a greater growth rate of deliveries in the next couple of years as well. So obviously much is happening for NIO in the near future as well as in the longer term. In addition, NIO also has the ambition of becoming a global brand and not tied solely to China. The company's global expansion has already started as the company began to deliver the first batches of SUVs ES8 in Norway this month. September was the month for that. The company is likely going to be successful there, as Norway has one of the biggest EV penetration rates not only in Europe but in the world as well. After that, it's only going to be a matter of time until NIO starts its expansion in other European countries. One of the biggest upside of NIO is that it has adopted a unique concept of creating user advisory boards where anyone can participate and give feedback regarding the company's vehicles. So obviously innovation in this regard. Thanks to such advisory boards, NIO can better prepare for the mass launch of its products in foreign markets. In Norway alone, the company had 800 people being part of the user advisory board, above the expectation of 200 people, 4 times more in number. The same strategy will be used in other markets as well in order to have successful launches that should lead to the creation of additional shareholders' value along the way. At this stage, it's safe to assume that the European and then global expansion is likely going to intensify in the following years. NIO has already started hiring people in Amsterdam, while at the same time it has recently invested in British automaker Lotus. Just like I mentioned, NIO is doing a lot with in terms of cooperation with other automobile companies, which should help it penetrate the UK market in the future. In addition, Intel will use NIO's ES8 SUVs for the initial robotaxi fleet in Germany next year, which should help the company to enter the German market at scale later on as well. Considering that it's unlikely that we will see a trade war between China and the EU, as both parties are expected to sign a major investment deal next year, European opportunities appear to be limitless for NIO at this stage, as the EV market is still in its infancy there. Now let's get into the risk. That's the interesting part. So in my opinion, the risks are nothing at this point. You will see it. Just as it's the case with any other public Chinese company, NIO faces the risk of a possible delisting of its share from the United States Stock Exchange in case the trade war between the two of the biggest economies in the world erupts in the future. That's been talked about quite often, but I don't think so. The good thing is that the company is not directly exposed to the United States, as all of the operations are within China. In addition, the possible Hong Kong IPO next year should help the business to continue to have access to global capital market in the case of delisting. I think Donald Trump was the one who brought this up. Negative sentiment towards Chinese companies is a downside as well, especially after the Chinese authorities began their crackdown on domestic business that are traded on US exchanges. However, we don't believe that NIO will be strictly regulated by Beijing, as it's the case with tech business since the company is still not that big in comparison to the country's tech behemoths. We also believe that it's beneficial for Beijing to help NIO become a successful automaker in order to reach its goal of becoming a carbon neutral nation by 2060. Another major downside news is the ongoing chip shortage crisis. This is happening to every company, automaker, EV maker at this point. If in July the company delivered 7,931 vehicles, up 124.5% year over year, then in August it delivered only 5,880 vehicles, still up 48.3% year over year though, but down 25.9% quarter over quarter. Since it's likely that the crisis will not end anytime soon, deliveries might continue to disappoint investors in the following months until the disruption of the supply chains is over. So what is the takeaway from this article? The takeaway says that despite all those risks, there are more than enough reasons to be bullish about NIO. In Q2 alone, its vehicle margins were already 25.3% against 9.7% last year. In addition, in Q2, the company recorded a net loss of only 102 million, its lowest quarterly loss since becoming a public company. On top of that, in Q3, the business is expected to generate 1.3 billion to 1.49 billion in revenues, up plus minus 100% year over year, while for the whole of fiscal year 21 the revenues growing rate is expected to be over 120% year over year. In addition, due to the aggressive growth of the EV market in China and abroad, NIO has all the chances to reach over 70 billion in annual revenues by end of the current decade. Therefore, 70 billion, that's massive. Therefore, at the market cap of roughly around about 60 billion at this point, the stock is not as expensive as it could be in the future if such an aggressive top line growth remains. And that makes it a really good opportunity. I talked about this in yesterday's video. You guys could check it if you are interested. We should also not ignore the fact that at the end of Q2, NIO had only 1.52 billion dollar in the long-term debt, while its liquidity stood at 7.5 billion at the end of the quarter. And recently the company raised an additional 2 billion through the ATM offering, which will help it to continue to fund its growth. Another positive thing is that the street expects NIO to show a profit in Q4, while annual profitability is already expected in 2023. For that reason, we continue to believe that NIO is a solid long-term Chinese EV play along with XPeng, especially since it trades at a significant discount of over 60% to the street consensus price target of $61.55 per share. So let's get into what is the Wall Street point of view. At this point is 67.52 with 80% upside potential, considering it a strong buy, currently trading at 37.51. I am also highly bullish on NIO, and this article was really nicely summarizing what is the near as well as the long-term future for NIO, which is seemingly very green. So that was my brief video for you guys. If you found this video of value and you want to become part of the community, hit that subscribe button as well as the notification bell, and I will see you in the next video.